welcome to the life of a dividend investor and option sniper, aka day trader. I just want to share my public account here. I have this account. I basically started with $1,000, just slowly investing into some dividend ETFs, and I had worked very hard on numerous projects, saved up money to fund this account, put in $25,000 just so it could be a margin account. I do daily dividend buying, and as you can see right now, the bulk of this account is still in cash. I'm a day trader. I mostly trade SPY and QQQ options. However, I do make stock trades as well on mostly large cap stocks. I have set a goal of making at least $1,000 a day in day trading. Every day is not always going to happen, but I've been doing great since I started this account. For a little bit of knowledge here, this morning the market took the shit. It took a big old shit, and my account opened at like $39,800. So my actual day trading gains today were probably around $2,000. I did lose a bunch of market value. As you can see over here, the total gains and loss, I'm negative 738 on my positions. When the market did close today, before Amazon shit the bed on earnings, I was up about $1,300 in the green on the day, but it just finished under 1,000, but it is what it is. Earnings season can be a disaster. So I just want to go over some basic premise of what I intend on doing in this account. It's mostly dividend growth investing for my assets. I have no desire to pick stocks. Have played that game in the past, had success, had failures, more success than failures, but I'll be honest, I really can't find any companies in the current age and with AI and all this other nonsense that I'm like super bullish on because things are changing, evolving. But I do keep myself very diversified in the sectors. My goal is to have about 30 different ETFs in this account, combining dividend growth, higher income, and some growth ETFs. Right now, I'm just going to go over briefly a little bit about each, and then, once a month or so, I'm going to update the account. Hopefully it continues to grow. Hopefully the dividends continue to grow, and all that stuff. So QDVO, I love this ETF, even though it's a NASDAQ covered call ETF, but they don't sell 100% of their shares into covered calls. So it's an opportunistic covered call fund. SPYI, S&P 500 covered call fund. It's done pretty well. It kept up with SPY last year, almost toe to toe. So I'll take that with a nice dividend. Silver was hot, for the last couple months, and it recently corrected horribly. But I still think it's going to bounce in the near future. But KSLV, it's a high income silver fund. Then I have, we always need energy. We always need gas. So XLEI, that's an energy covered call fund. Then we have utilities. We got to pay our bills or our utilities, XLUI. And then we go into QQQI. I'm always a little more hesitant on that just because I feel like AI is kind of a bubble, like it's the unknown. Everyone was super bullish on the run up, but when it starts taking jobs and things go wrong, how bullish are people going to be? I'm not saying it's a complete failure, but I think it's overrated. I do love semiconductors, so I have SOXQ. It's like the SMH, it's just a cheaper version of the fund pretty much. The truth of the matter is you can't make anything on God's green earth these days without chips. So we need this, I do intend, if it corrects more, I want to buy a lot more of it. IGLD, it's a gold higher income fund. It has a nice history. I like it. I like having gold in the portfolio. SPYM, that's just a cheaper version of SPY. The reason I don't own SPY and QQQ in here is because I often day trade the shares, 100 shares, 150 share trades on margin, whether it's pre-market, aftermarket. Sometimes if I don't feel like taking an options trade, I'll also do it during the day. That's why I can't own the funds in here for the long term. So I buy like other versions of them. SCHD, this is the goat of dividend growth investing. My goal is pretty much to buy 1 or 2 shares every day in this fund for that one. Because, 10 years, 15 years from now, God willing, much more than that, that's going to be a massive income earner for me. DGRO, I think it's more of like an up and coming dividend growth fund. I still love it. KQQQ. This is another NASDAQ covered call fund. It actually outperformed QQQ in 2025, so I do like it. SPHD, this is just a lower income, lower volatility, higher dividend, more defensive names. RFI, I don't love any REIT typical ETF, but this is a closed-end fund for REITs. It's not the greatest for growth, but it pays a steady dividend, and it's a good hedge on the portfolio. COPX, this is a copper miners ETF. It pays a pretty decent dividend. GOLY, this is a new one for me. It's another gold enhanced ETF, a higher dividend. Very new to that one. PICK, this is a platinum miners ETF, pays a decent dividend. I have all 4 of the major metals. And PFFA, this is a preferred dividend ETF. So it's the preferred version of a dividend. Instead of common shares, preferred shares. That means that they are required to pay dividends first in case bad things happen to the economy and to the market. The biggest position right here is cash, $25,103. I do intend on dropping about 1,000 into ETFs tomorrow. I've had a great week so far. I think we're up about $7,000 day trading in the first 4 days of this week, so I can't complain about that. The goal for tomorrow is don't do anything stupid because it's been a great week. I will tell you, I have in my Roth, I have a lot of different other ETFs. I try not to mix too many of them. I do keep SCHG in both funds. But I do want to add SCHG, which is a, sort of like a QQQ Schwab version. I have that in the Roth, but I was thinking I think it'll be better suited for this one. Give me some more growth in this ETF and this portfolio. The market, Amazon didn't help. Pretty much every Mag 7 that is reported, other than Meta. I mean, Meta had a good reaction, but it already sold all its gains and gave it back already. Apple went up a little bit. Microsoft shellacked. Tesla shellacked. Google not very good reaction. Not horrible, but not good. But it also had a phenomenal 2025. Amazon, this is the one that disappointed me. I'm not going to lie. I thought Amazon would have great record earnings, but they did warn this morning, the tariffs were impacting them. So that was not a good reaction. Now, we still have NVIDIA, later on for the Mag 7. They could still be raking in the money with the hyperscalers and all that stuff, and they could save the market like they have in the past. So, I don't know if this is going to be a 5% correction, a 10% correction, a 20% correction, a bear market. I don't know, but, as long as I keep buying daily and my dividend army continues to grow and I'm making my day trading winning, I cannot complain about that. So I'll update this probably at the end of the month or early in March to see where the progress is. And then if I add any new funds, I'll update that as well. And I'll also probably make some videos detailing further like each of these ETFs with maybe some additional data like on the dividends and the growth and all that stuff.